Hello everyone, welcome to this week's weekly market view for Monday the 27th of March to Friday the 31st of March 2023. My name is Vishal, let's get started. Alright, let's start with the key markets first. We will start with the Nifty, but before we start with the Nifty, it's important for us to understand that this week is going to be the monthly expiry week, so we can expect to see a lot of volatility coming in. Market is looking a little bearish right now because of all the news that is circulating around on the global front also. However, on Friday, we saw a significant rally coming into the global markets, which also overnight pushed the SGX Nifty close to nearly 100 points positive. Now, will this overnight rally sustain and will it show up on Monday is going to be the key question. But depending upon what we see on the charts, it's more important. And looking at the levels, which is currently the close 16,945. Let's dive down deep into the charts and let's analyze some of the key levels for this week. Let's start with the monthly chart. And on the monthly chart, we are seeing a little bit of a breakdown in price. Now, this level is still holding and prices have gone deep inside this level. So it's going to be very, very now crucial for this level, because in case if the level breaks to the downside, then we might see a little bit of a more selling pressure and a fast selling pressure coming on the Nifty. But if this level does hold and we see a slight turn in price, then we might see a pretty much a bounce back in the Nifty index, and we might go again closer to those 17,100, 200 levels. But that is only if we do get a bounce. But let's see. On the weekly chart, we are again seeing this area, which is going to be a little difficult to break in due course of time. But this level will be more key if this 16,653 level is taken out or broken. So if the market does break the 16,653 level, we might see a sharp move again coming in into the Nifty, mostly a retracement or a pullback, and then we might see the lower levels. And the key levels on the Nifty to watch out for will be this area, which I have been constantly saying. But of course, this level is currently far away from the current market price, which is 15,940. So the key areas to watch out for this week will be this weekly supply zone, and this weekly supply zone will be more or less active once this 16,653 breaks to the lower side, which will engage in more kind of a downside into this market or a free fall into this market. So what we are expecting most likely is that we expect the price to break. Once the price breaks this level, we expect the price to retrace back and then continue to the downside. Will it give a complete retracement? We don't know. Price might just retrace somewhere over here, and then might even turn back sharply over here. But this 16,653 level on the weekly chart is going to be a key level to watch out for. All right, let's move on to the daily chart of the Nifty. And let's quickly have a look at the daily chart on the Nifty. So we'll get of all the tools here. And let's look at some of the key levels on the Nifty. Now, if you just observe something over here, I'm just going to draw a line in the sand here. And this is the level from where actually we had a pretty sharp fall and a close below this entire area here, right? So this has been a support level to say in the past, and prices are finding it difficult. The moment the price comes to this 17,200 to 40 level, we are seeing a sharp fall in price, right now we are still holding on to this level of demand, which was again a pretty decent level from where we did expect a bounce, but somehow we are not seeing a lot of strength in the market here. Now, what the markets are actually doing is they are more or less into sideways consolidation. And whenever the markets tend to remain in a sideways consolidation, let me just change the color here to just explain you this concept. Right. So the moment the markets are just moving in a potential sideways consolidation, they have the tendency to either break to the upside or they have the tendency to sharply break to the downside. So what we'll have to observe in the days to come is the following, right? If markets keep on ranging here, they will not keep on ranging here forever. So there are two key things to watch out for, right? And this could happen in this week, or this could happen in the coming days or coming months, to say so. So what we'll have to see is we'll have to see a complete break of this level, and maybe preferably even a close below this level. This will open out a clear downside where we might see prices again retracing this level and prices moving sharply to the downside. This is scenario number one. Under scenario number two, in case if the prices do break out of this 17,246 range and we see a candle close above this range, then most likelihood we are going to gauge towards the upside, where we might have this as well as this as our barriers. But this is how I think the scenario is most likely to play out. And as an intraday trader, there are a few opportunities that as long as the prices are within this consolidation, then there will be some important key levels to look at. If you look at the volatility index, which is the IV gauge over here, the option premiums are more or less deflated. They are not showing any kind of inflation yet, although the prices on Friday, did sell off after hitting some critical levels of supply, and we'll bring up those levels for you shortly. But this is what we are seeing right now on the Nifty. So I'm just seeing two possible scenarios in case if the market breaks 18.8, this low, which is 16,748, then we might see a big sharp to the downside. And if in case prices sustains and closes above 17,246, then we might see a little bit of a sharp move to the upside. So this is the scenario that is more or less seen on the daily chart of the Nifty. Now, if we break this down onto, let's say, a smaller time frame, and let's look at some of the key levels on the smaller time frame. There are some important levels on the smaller time frame. So we'll go to a 15-minute chart first. And let's remove, or let's keep this this blue rectangle as it is. It will be a good reference point for us to see what is happening. So if you see very closely over here, just outside this blue rectangle, we have a few levels or key levels of supply that are lining up. We see one level of supply, which is over here, and we see another level of supply just above that, right? So these are going to be not so easy levels for the market to break. So in case even if the market breaks this box, we'll have to see whether we get a sharp reaction, because there is a possibility that in case if the markets do move strongly to the upside and do eventually break this level, then these levels are going to more or less act as an obstruction, and price might again come back into this rectangular box or consolidation area. Okay, so these are going to be two key levels. If these levels are tested and price, let's say, consolidates and sustains over here for, let's say, a couple of trading sessions, then most likely we are likely to break to the upside and move towards the next levels of supply. But as long as the price breaks out of the supply, a lot of bulls might get trapped into these levels. So these are going to be two key levels of supply to watch out for. And within this area over here, there is one key level which I would like to point out. It could possibly play out in the coming few days or coming few weeks, is this level on the 5-minute chart. So let me just get this level out here. So you can see this level of demand over here, rally, base rally, right? And this is again within that entire range bound price reaction, right? So if we just get this out, then these are going to be the key levels to watch out for on the Nifty. So what we might expect to see is, we might expect to see the markets possibly gapping up, but not sustaining for the longest period of time, because we are going to have some kind of a friction to the upside when it comes to the supply zones, right? But we could see a scenario where we expect to see something like this happening, where price comes into this level of demand and then starts creating these higher highs and higher lows. And that's the time where we might most likely see a move back to the upside. But we do have a lot of obstruction, and the obstruction that I'm trying to point out is we may not get significant moves, but we might get those moves which will be good enough for an intraday trader to say so, right? Now, if we just closely look at the options data here, let's quickly have a look at the options data. Just minimize my camera a bit. We can clearly see that there is the highest open interest is on the call side is at 17,100, right? And if we do open based on the SGX Nifty, which is the SGX Nifty has closed around 17,037, and if we do see a move again back towards anything above 17,050 odd levels, then we might see some selling coming in close to 17,100 levels, because that is where the highest open interest is. So let us see if we do have something anywhere over there. Around 17,100 levels, we don't see any supply level, but we do have this level. And for the market to really, show us some strength to move towards 17,328, this level of supply needs to be breached. So unless and until this supply level does not breach, most likely we might see the price consolidating within this level of demand and this level of supply. And that consolidation again could possibly last for a day or for a few days before, let's say, something like this happens, or then something like this happens, right? Any break to the downside will lead into, let's say, a more faster move. And in case if the market breaks, then the 17,200 odd level, then we should see prices moving or having no hard time towards 17,328 and 17,418. All right, so these are pretty much the key levels on the Nifty. Let's move on to the Bank Nifty now, and let us find out what's happening on the Bank Nifty charts. So let's quickly load the Bank Nifty. Perfect. So now we have the Bank Nifty chart loaded. Let's quickly have a look at the monthly chart. On the monthly chart, again, we are right into this this level of demand, comparatively slightly a better looking chart than the Nifty. Looking at this level, we are seeing a little bit of buying pressure coming at the lower levels over here. And last week we saw that happening. If we go on to the weekly chart, let's move on to the weekly chart from here. Yes, what we are seeing is that we are seeing this level of weekly demand holding up, right? Now, what is very crucial to see also is that we are unable to break the low of the previous week, right? And what was the low of the previous week? The previous week low was 38,613. So 38,613 is going to be a very, very crucial level for the Bank Nifty, right? Any break below that level or close below that level will induce in more selling. And what is important to see is this 37,338. If we do see a break of this level, then just like the Nifty, we'll have a very, very clear path of least resistance to the downside towards 34,175 odd levels, right? So this level of demand is going to be very, very crucial. And if in case price is unable to make a new low, then most likely the prices will start again turning to the upside. We don't expect a big turn, but in case if that happens, then we might potentially see a breakout, right? Now, if we apply the same concept, or just like how we have applied the concept on the Nifty, let's draw a box here. And as you can clearly see, as per this box, we are seeing a pretty similar price action, which is taking place on the Bank Nifty as well. We are seeing consolidation, and somehow or the other prices are unable to close above this range, or prices are unable to close below this range. We are still holding on to this level of demand, and this level of demand is still holding pretty strongly. And here you can see that prices are unable to break and make new lows here. Okay, Now, what can we expect? We can expect the following, taking into consideration if we do see weakness in the market because of whatever is happening on the global front, a break and a close below this candle range, right? Something like this, and a break below this will probably push the market further to the downside, and any close above this, right, will try and push the market to the upside, and then we might see these levels happening. So pretty much similar scenarios, and eventually we all know market is not going to just remain consolidated for a longer period of time. But now as a trader, if the market is consolidating, then can I capitalize and make any use of, let's say, this consolidation to identify or look at certain trades? Let's now move to a 15-minute chart, and let's look at some key levels on the Bank Nifty. And if we look at some key levels on the Bank Nifty, let's go first to a 15-minute chart. And on the 15-minute chart, we did see a reaction coming from this level over here. And this is exactly what I have been saying that can happen on the Nifty as well, where you see prices showing indication that they want to move up, and then the buyers get trapped into this level, and then the price comes back into this level of consolidation. Now, what is interesting on the Bank Nifty is that within this rectangle, right, we have this one key level of demand, and prices came very, very close to this level. So this level of demand is going to be key, and most importantly, this level of demand, right? So if price breaks this level, then we might go to test this level. But in case if the price breaks below this level also, then we'll see a very, very sharp move coming in to the downside. As long as these levels are intact, as long as this level holds, or as long as even if this level breaks and this level holds, we are going to most likely see a slightly bigger consolidation of price action between these two levels, right? Before eventually this happens, or then this level breaks and this level breaks and prices go to the downside. So these are going to be a few key intraday opportunities if you are trading the Bank Nifty on Monday. All right, let's move on to the next chart. Let's quickly have a look at the open interest data for Bank Nifty. Let us see what Bank Nifty is telling us. Okay, so if you look at the Bank Nifty open interest data, we do see a barrier at 39,500, and the next big barrier is at 40,000. Now, depending on the SGX Nifty, if I think on Bank Nifty we have a closing of 39,395, most likely we might open on the Bank Nifty around 39,500. So let's quickly go and see here. As per the data, 39,500 is going to be acting as a barrier, and to the downside we have 39,000. So 39,000 is somewhere over here. So as I said, that this demand zone is in play and can play out well, and to the upside we have 40,000 as the barrier. But let's quickly also have a look at 39,500 to see if there is anything interesting lining up at 39,500. So we do have this level of supply which is slightly above 39,500, and markets came into this area, gave a nice retest, and started to fall from this area. So any move coming in into this area can lead to another fall. So keep a close watch on this supply zone. Prices have barely touched this level and fallen down. So there can be another attempt, and this time the prices might go a little bit deeper and then come back to test this area. So now what are the likely scenarios for Monday morning, right? In case if the market gaps up, I wouldn't be too keen to take any shorts here, although the open interest is telling me that 39,500 can provide another shorting opportunity. This will be a slightly aggressive trade. You can possibly take this trade if you wish, but for me the key area on the chart is going to be this supply zone here, and then of course you have this area here. So unless and until this supply zone breaks, we are not going to see any momentum to the upside. We might see the prices hitting this area and then again consolidating and coming down. So these are going to be more or less the intraday opportunities, let's say coming week on the Bank Nifty based on the open interest data as well. Let's have a look at the USD INR, and let us see what the USD INR is telling us. So on the USD INR, I'm straight away going to go on to the 75-minute chart. Like I said, that price has broken down. Now, if the USD INR does move up into this area, which is, it creates a little bit of a gap and then moves into this area, any move into this area will lead to another fall. Okay. And in case if the USD INR gaps down on Monday morning based on the SGX Nifty data, then we might see a little bit of a move somewhere inside this range. So a potential market turning point on the USD INR will be this supply zone. And when the price does eventually get here, you will have to keep a very, very close look on where the Nifty is trading, right? Because in case if the price comes here and begins to fall, then most likelihood Nifty would possibly also be into an area of demand, and then Nifty is likely to move to the upside because the USD INR and the Nifty have an inverse correlation. So if you keep both these charts next week, this will help you to slightly make a little bit of a better analysis in terms of your entry on the Nifty as well as the Bank Nifty. So this is just a little bit of a clue on how to trade the Nifty and the Bank Nifty by looking at the USD INR. Let's have a look at Fin Nifty. And we have the Fin Nifty expiry coming Tuesday. So let's quickly have a look at Fin Nifty. And again, I'm just going to go here to so the key charts on the Fin Nifty. I'm looking at the 75-minute chart right now. You can see how the prices have failed to give a new high and close above, and now they have broken down. So for Fin Nifty, 17,703 to 17,794. If the price does gap up over here, again we might see a little bit of a selling pressure coming in from this area, and prices might go down towards 17,400. If prices do gap down, then we might see a bounce coming in, and more or less as long as this price is holding and this price is holding, we might expect to see Fin Nifty just moving up and down between this consolidation. If we do happen to see a big move in the Bank Nifty, we will have to see, because then Fin Nifty will start doing something like this. In case if Nifty and Bank Nifty break to the downside, then we might see Fin Nifty doing this. All right. So these are the key levels on the Fin Nifty to watch out for. Now, if we look at some of the stocks, let's have a quick look at Axis Bank. All right, and let's look at the weekly chart of Axis Bank. And as you can see, prices are now, just indicating a little bit of a pause on the monthly chart. We still have a few days for this monthly candle to close, but the bigger chunk of demand is still somewhere over here. Right now, we could possibly draw the demand zone like this, and we could also say that prices are possibly reacting from the wick of the base. But of course, with time the prices can go a little bit deeper inside. On the weekly chart, we are seeing a little bit of a consolidation, a negative move. Prices have removed this area of demand. If you go on to the daily chart, this is what is seen on the daily chart. No clear price action. Prices have just come into this level of demand and are holding. Every time the prices come into this area, prices are finding it a little difficult to move to the upside. And now what is interesting to see is just like the Nifty and the Bank Nifty, we are seeing some key levels on Axis Bank as well, right? So if you look at this overall price action scenario, generally whenever the prices are trying to break out or trying to make a new high, if you see a little bit of a breakdown in price, more or less that is going to tell you that maybe the move may not sustain and prices are likely to move to the more likely to move to the downside, right? So let's go to the 15-minute chart. And if you look at the 15-minute chart, we do see this this gap supply. So this is again going to be a very, very crucial area for the Bank Nifty. Prices have tried to make a reasonable attempt to come to this gap level, but have not been able to, touch this gap level. So what we are expecting is any strong move that comes into the market will get slightly arrested here, and then prices might move back into this consolidation. There is no clear level of demand. However, we'll have to just keep a close watch on this area, which is this rally base rally. And the only reason is that the bank nifty level is also lining up over here. So in case if the bank nifty and the Axis Bank level both coincide at the same time, and if the bank nifty starts to move up, then we might also see Axis Bank moving to the upside. So this is how you can possibly play a little bit of a correlation on the Nifty, on the bank Nifty as well as Axis Bank. The other stock to watch out for is Bandhan Bank, and Bandhan Bank is also pretty clear and evident. You can see how Bandhan Bank is trading right now on the monthly chart, just consolidating and giving a little bit of a breakdown. So things are not looking very great on Bandhan Bank, right? We are at the very low end of the range. But the key area to watch out for on Bandhan Bank will be this 75-minute supply zone, right? And this supply zone is, all about this high over here. So any break above this level will possibly induce a lot of buyers to, buy the breakout of this level. And maybe the buyers are likely to get trapped into this level. So the way I would look at this level is, in case if the prices do move up, I'm going to use the moving up of the prices to possibly look at the prices again falling down, right? So this could be a potential trap for the buyers, but let's see if that happens on Monday or probably this week. Please note that this week expiry will take place on the 29th. We are not going to be seeing 30th because 30th is a holiday. So 29th is going to be expiry, which means that this is going to be a truncated week. So we expect to see a lot of volatility happening on the 27th, 28th, and the 29th. 28th, we have the Fin Nifty expiry, and 29th, we have the monthly Bank Nifty and Nifty expiry. I hope you enjoyed the analysis. I've tried my level best to give you some of the key and the important levels. Just make sure that whenever you trade, you keep a proper stop loss, you do proper position sizing, you don't overtrade, and stop loss is a part of this business. So in case the day you make too many stop losses, it's always good to shut down your shop and do something else. Okay, I hope you found the levels valuable. If you do like our video, please do not forget to hit the subscription button and do subscribe to our channels for more videos like these. I wish you all the best for the coming week, and hope everybody's month has done well. And looking forward for the next month analysis very soon. Take care, everyone, and enjoy your trading week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.